Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Friday, October 8th. It's 6:37 as I'm starting the video this morning. Everything's pretty much flat heading into the September jobs report at 8:30. Equities are kind of like bouncing along the flat line. Flat to a little bit green, but that can't be trusted ahead of the jobs report, so I'm not taking a whole lot from it. Oil is up 1%. We had a little bit of drama yesterday early in the session. They did a pretty good rug pull on oil when they were talking about. It got reported that the administration was going to do a big release of from the strategic petroleum reserves, but in the afternoon they said that wasn't true, so then oil rocketed back up, and overnight oil was pressing like 79, 75, something like that. It's backed off a little bit, but it is up near the highs. So on the macro front this morning, as I said, we've got the September jobs report. I don't know what the number is. I'm mostly interested in the reaction to the number because, as we've seen before, a big beat means, it could be good or bad for the stocks, for the market. So I don't know what that number is. Also, I heard that Lael Brainerd of the FOMC is going to be speaking today, but I didn't see what time. And remember, she's got designs on being the Fed chairperson, and with Powell embroiled in all this trading activity by the FOMC governors, the odds of him getting reappointed have been going down, if you believe the betting sites. And like I said the other day, his renomination is probably being used as a bargaining chip with the progressive wing of the Democratic Party as they go in through these budget negotiation talks that, if the administration wants the progressives to back off their demands, he might throw a bone to them on, okay, well, you get to pick the next Fed chair, something like that. So all way above my pay grade, but thought I'd pass it along. Let's dive into this. I want to go through it rather quickly, given it's all going to change probably at 8:30. Yesterday, pretty good bump in rates. We're trading now about 1.57% on the 10-year, and you can see we're in the middle of this new zone up here where there was quite a bit of trading in the past, back in the spring. So now, while we're up here, I think it's going to be favoring the cyclicals, the banking, the reopening, as we've been talking about, and kind of a headwind to tech, specifically high valuation, bubble names, etc. What would mitigate that, I think, is if it really just consolidated here for quite a while, let the market catch up to it, kind of thing. But that's where these job numbers come in. If the job numbers come in like really, really hot, this could take a big jump this morning. So we'll have to keep an eye on that. The TLT short idea is starting to work. And so this will be in the crosshairs today as far as something that could move a lot in either direction. So if you've got something on that, pay attention, because obviously it's going to be trading inverse to rates. And if, rates spike, then this is going to drop. And if you're short, that's going to be welcome news. So, but I mean, the TLT chart is bearish. If you look at it from the standpoint of just technicals, imagine this being a leg down this being a consolidation flat bear flag, right? Leg 1, consolidation. Leg 2, measured move down. So you get the 1, 2, 3 type move. So, I mean, that is looking good technically as far as having that short in place. So if you've got that going, I would stick with it. I did want to, okay, VIX. We broke down below 20 yesterday, which was good news, right? So we had been in this range between 20 and 25 yesterday. They broke it down, closing around 19.15. Now I think the next regime is going to be a push below 18. And then that would get us into that really bullish zone between 16 and 18. So at least we're heading in the right direction as far as equities are concerned, bringing it down back below 80. So that gives me a little bit more confidence about going out on the duration timeline on bullish bets. So that was good. I wanted to show you oil. This is the WTI weekly chart going all the way back to 2012. And what I wanted to show you, and I showed you this on the USO chart. That's the ETF, that the tradable ETF for WTI. But you can see right here, we've definitely broken out from a level right here at a little over 75. Back here it was resistance, resistance, resistance. And now if we can close above that 75 level today, then we will have secured a weekly breakout on oil. We're not overbought. You can see it here. I mean, we're working our way up, but you can see it can go a lot higher. And so we're back in the highest level since 2014. So, I mean, that's notable, 7-year high, right? So, and in this zone here, because of the steep drop, there wasn't a lot of trading in that area. So this is where the price void is. So, coming across here, I think there's a legitimate shot at making some type of a flash run to 100, just from a technical standpoint, after a 7-year breakout, moving into a void in the chart. So I really like oil here. And the thing is, even if you're not in, you can have a tight stop there on, and you can see the comparable levels on USO. But I like energy here. Moving on to SPY yesterday. I mean, it started off really well, but it didn't really end so hot. You can see the big wick on this bar. From a technical standpoint, the good news is that we moved up above the 50 EMA in green and held it at the close. But I mean, that's not an inspiring candle, if you want to know the truth. When you open at the highs and then you close at the lows, that's not really what you want to see. But we are above the 50. There's an open gap below now between 438 and 435. So we got a $3 gap below. You can see here the gold, remember, is the 50 off of the daily chart. So we came up here to this line. Note where it stopped, right? That's why I draw the lines. There's usually something there. So there was, support, and then that was resistance yesterday, right above 441. and then they brought it back. So we're sitting above a $3 gap. Now this morning, if they were to drive this lower down to 435, to fill that gap, that's where I would be a buyer. 436, 435, but I mean, if it comes down here, I think they would go ahead and fill that gap, to take care of unfinished business. If they do that, that would be a great place to try a long and then, go back up. If they don't, then I think you can use the 50 right here as your line to shoot against on the long side. So if they pop it up, then of course we'll have that pre-market gap to deal with. But what I'm saying is we're at a nice spot on the charts technically because we've got the 50 right there as a kind of a benchmark level that below gives us caution and above gives us a green light as far as longs go. At least that's how I'm looking at it. You can see it here on the 30-minute chart coming up, got rejected. Now we've got the little, the good size gap below, and we've got the rest of this gap here that needs to get filled. So a lot will depend on how what the reaction is pre-market to the jobs report. And then what I'll do is try to gather some quick thoughts and get them to you before the open. If there's, if the thing moves, if there's no reaction, then we'll be good to go. HUGHES had trouble yesterday. I mean, again, it started out okay with a move higher, but you can see, it may be hard to see, but see the wick that went up and touched the 50 EMA in green, touched the bottom of this gap entry, and really didn't want any part of it. So as far as the Qs go, we don't have that nice signal above the 50 EMA. So I think we've got to be relatively cautious on the Qs. You can see here how price went up. We've got the gold 50 EMA coming in right with the bottom of the gap. We talked about that yesterday. It was just got rejected there and came back. So now we've got a gap above and then a gap below that needs to be filled. And one thing I will say is that just like on the other chart, if they come back down and fill this gap down to 360, that was an important line on the chart that I would think would hold. But that's definitely an inflection point and a pivot level at 360 if this thing does in fact fill. And as long as it's above, I think you can be okay being long. Just keep it on the radar because a break back below 360 would not be good. That would open the door for another test of these lows. And so I think 360 is a really big level on the Qs. Here's just a little more granularity on the levels. Don't think I have much to add other than the fact that what I really want to see to get, to have in my mind, okay, the low is in, is a move back above the 50, come up here, break the downtrend line, come up here, fill this gap, and then off to the races. So I'm being relatively cautious on the Qs while it's below the 50. Yesterday was a nice day overall for IWM. It easily outperformed the other averages. I think And it hasn't been a particularly easy trade, but I think IWM is set to outperform in this rising rate environment, if that's in fact what we have. For all the reasons that we talked about, it's loaded with regional banks and real world economy companies that I think will do well in that rising rate environment. So we gapped up yesterday, and then we got up here to 225. That was just about the time that I sent out that afternoon note talking about it, and then it kind of rolled over. But bigger picture, we've got the gold EMA here, which is the 50 on the daily. So we're comfortably above that now. What I want to see is that hold on any back test, and I'm definitely looking for long entries here. So for example, if we came back to back test the 50 here, I would be trying to buy that with a tight stop because of the gap below. And then if price moved into the gap, I would probably try to get short just for the gap fill, and then get long again. So like I said, it hasn't been particularly easy, but I think we've got this big impulse here. We came back, and now we put in a higher low, and now I want to see a move back above 227 to make a run for 230 and eventually 234 at the top of the box. So that's what I'm hoping for, but we'll have to see how it goes. Here's just a little bit more detail on IWM. Got the different micro levels here. Here's that gap. We've got a gap above as well. So let's see how that goes. Facebook, not so hot of a day. Opened up quickly with the market. Remember, we talked about this cluster of trades right here, that this level right here at 338 looked to be stiff resistance. Why? Because of all this trading. That was support. So now it's going to be resistance here, and just came up for a quick touch and then kind of fell apart. So not very inspiring. And I would expect relatively soggy trading while it's got this overhang, regulatory overhang. This may come down to test this 322 level again as another back check of this low. So, you've got the levels there for active trading if you're into that. But really, to get things going, we got to have a gap fill here and a breakout of this trend line. And then I think this corrective move would be over on a takeout of this downtrend line, and then move up to, you see all the gaps above. It could really get going fast if it broke out, from this downtrend line. So that's what I would be keying on if you were looking for more of a duration type trade. Apple, traded more or less with the market, came up here to 144, and you can see the reason that line is there. Resistance, all this resistance, support, resistance, resistance. So I think for Apple to move higher, 144 is going to be a great pivot for you. If it can pop above that, then you've got a couple of overhead gaps that you can target with your active trades. Tesla was a heartbreaker yesterday. I wasn't in it, but as a technician, as a trader, you feel for the guys that are trading it, because you had this big impulsive move up to 805, and it got right up to the prior high and then reversed just as fast back down to 790 essentially. So I mean, that's tough. I mean, that's a $15 move. A lot of people got long probably on that breakout thinking this is the one, and then got up to 805, and then they pulled the rug just that fast. So that was a frustrating trade. I think you can stay long against 790 and then see if you get that big breakout, or if you are a person that says, hey, price has got to prove it, then you can set an alarm at 805 and let price do whatever it wants down here, and then you take the breakout at when your alarm goes off at 805 or 805.50, whatever you want. But that's definitely the breakout level. Microsoft, big move off the floor, came up to gap resistance right here, got turned away. We've got a nice line here at 294.50. I think you can stay long against that if you are long, or today, I think that's a good pivot level for you. And then you've got a nice $2.50 gap above that starts in around 296.50 and runs up to a little above 299. Maybe it's a $3 gap. I'd have to put the tool on it to get those exact levels. But, unlike some of the other charts, this has broken the downtrend line, right? We were in a down channel. We went from the low to the high of the channel and then broke out above. So as long as this can stay above, this level here and not fall back into the channel, it looks like a productive breakout there. So if the market behaves well, I think this 294.50 will hold, and we can make a run back up here towards 305 over time. Amazon, gap up, came into this resistance level right here, 33.20, pulled back. I think you can be long against 32.90 right here where the 200 EMA kicks in. But if it loses that again, then it's going to fill this gap and possibly even roll back over down here. But as it stands now, it's in a position to take out this downtrend line, and then just like Microsoft and Apple and the other ones, once it can break out of this downtrend line and move above 33.40, then I would say it's probably on its way. And with all these gaps above, it could be a place where you want to be on board, because if there's a impulsive move higher, those gaps are going to be natural targets, and that's where price can move very quickly. Google, same thing. I don't have this chart as developed as I should for you guys, but there was a gap up, so there's a gap down here. We went up halfway, pulled back, but it held the gap support here at 27.80. So as long as that holds this morning, you're in good shape. If it pulls down below and fills this gap down here, I think you can be long against 27.50, and that's right where that 50 EMA is. So that's how I would handle that one. And we've got Netflix. impulsive move, big bull flag. You can be a buyer on a breakout of 640, or you can be a buyer at the bottom of the flag down here at 627.50. That would be a good place to be a buyer as well. If it falls out of the flag, it can pull back into 615. That would be a place for a back test of the breakout. So nice. I mean, it looks like it wants to go higher. Flagpole, flying at half mast, consolidation, breakout. I think this thing has 660 written all over it, but price has got to prove it. But it's a very strong technical pattern, and seems like Netflix has an upward trajectory. Semiconductors got a $3 gap below right here. So I think you can be long against it, long against 257. And then we've got this secondary breakout level right here at 262. And then above that, I think we've got, I never want to say clear sailing, but it will be looking a lot more productive. Here's that primary breakout line at 258. So remember, we've got a giant measured move target of 295 from the big trading range from before, remember? So like anything above 258 is going to be constructive. And then above 262 would be like a confirmation type move, because that was a resistance level going back in the chart. I would like to see that taken out as well. So kind of in limbo here ahead of the jobs print. Let's see how it goes. If I can get a good read or can offer some ideas before the the regular open based on whatever happens after the jobs report, I will certainly do that. So if you're new here, I hope you appreciated the analysis. I'd encourage you to hit the subscribe button and the alarm bell. That would be awesome to have you be on the team. And then if you want to go the extra mile, jump over in the show notes and you'll find a link to where you can register on the website with your email. And that way, everything that I do, pre-market notes, midday notes, weekend notes, comes right to your email box, and you won't have to hunt for it over social media. There's a lot of things that I send to you guys that never hit Twitter or stock twits or any of that stuff. So it's good to sign up for that. That would be great. And then also as a bonus, you'll get a link to our trading room, which has been pretty dynamic lately. We've got a lot of new people, and it's always nice to have fresh eyes looking at stuff. So good group of traders, both girls and guys. So that's great. And then, of course, longtime listeners, thanks for being here with me. Let's keep it going. And anything that you can do to pass along my link to new people, I'd really appreciate that. So let's see how the job reports goes, and then we'll see how to wrap up the week. This has been Chris Buss with Traders Profit Compass. Talk to you next time.